Bitcoin-backed loans are exploding in popularity, but almost nobody is talking about the real risks. Over the last year, I've been asked numerous times, hey Gigi, what's your opinion on Bitcoin loans? Should I go for it? So in this video, I want to share my personal perspective on what I believe borrowing against your Bitcoin could be the most dangerous financial move you'll ever make. If you've ever considered taking out a Bitcoin-backed loan, you'll need to hear this, because what's marketed as financial freedom could actually cost you all of your Bitcoin. Let's get started. So quick personal intro to all the new viewers on this channel. I've been in the space for over 8 years, and I've personally experienced and witnessed a wide variety of different ways individuals lost most of their Bitcoin, myself included. From being a part of ICO scams, NFTs, leverage trading, and Bitcoin-backed loans are just the latest vehicle which are here to part you from your Bitcoin. At first, the surface appeal of Bitcoin-backed loans, it's seen as an easy, quick way to get some extra cash to, in some cases, buy some more Bitcoin, which I think is a terrible idea. And of course, the other point of avoiding tax. Never sell your Bitcoin, which in my opinion is the wrong mindset to have, because Bitcoin, it is money. So use it as money for things that you need. Now, the other aspect is counterparty risk. So trusting a third party with your Bitcoin historically has shown to be a bad decision. We've seen the likes of FTX, Celsius, BlockFi, all these large companies that look like the next big thing, and everybody rushing to give them and loan them out their Bitcoin. In the end, went bust. The house of cards just came crashing. And I truly believe the same thing will happen with many of the Bitcoin specific backed loan companies that are selling their attractive goods to the innocent people. Now, volatility risk and margin call. So price swings can trigger liquidations and the loss of your Bitcoin. To go deeper into this, borrowing against your Bitcoin is something very dangerous that most people overthink the actual risk management of it. So what I mean by this is, if you really want to go out and get a loan against your Bitcoin, you should never ever risk more than 2% of your stash, which most people don't even think about that. They whop in with half or even all of their Bitcoin holdings. To put into perspective, a 2% risk management, let's say someone holds 0.1 Bitcoin, 10 million sats, and you go out with a 2% loan, which is 200,000 sats. At the time of this recording, that's roughly $210, which is not that much. And essentially, why would you go through the whole hurdle of creating an account on these platforms and giving up 200,000 of your sats? It just simply doesn't make sense. So for most people, Bitcoin-backed loans is not a vehicle that you should be undertaking. However, if you're someone who holds, let's say, 100 Bitcoin and you take a 2% loan on that, so 2 BTC, that's around $210,000. The chances of someone that holds 100 Bitcoin and is watching this video is very unlikely. In that case, I want to cater this video to people that hold a small stack and are hardworking citizens. The other aspect is risk of financial instability if income dries up. So let's say you took out an over-leveraged Bitcoin-backed loan and next month you lose your job. Essentially, your finances get into a critical level, and not just the fact that you have normal bills to pay, you also have this debt on the credit which you borrowed against your Bitcoin. Another aspect is market drops. So even though Bitcoin has been ripping over the last 2 years, that doesn't mean we're going to go through a bear market. Now, I'm not saying, as historically we've seen 70 to 80% drops, even though we never know, could happen if there's black swan events. But in the case that the market drops, your collateralized Bitcoin basically comes to a margin call, which means that you need to add more Bitcoin to hold that position. So in the case that you went 100% in to get a Bitcoin-backed loan and the market drops, and you have no more Bitcoin to add as collateral, all that Bitcoin you loaned out suddenly gets separated from you. The other aspect is debt cycles. The possibility of triggering an endless loop of borrowing to cover loans. You got a Bitcoin backed loan, and now you need to repay it. So you're getting other loans to cover the first loan, which is just madness. Essentially, Bitcoin is the opposite of credit and debt system. To remind yourself, you are stacking Bitcoin in the first place to get out of this credit debt system. So why on earth would you do a 180-degree pivot and go back into debt? The next point is loss of control. So surrendering your private keys, losing custody of your Bitcoin, is the total opposite of Bitcoin core ethos. As you guys all know, not your keys, not your Bitcoin. So this is a huge risk where you are entrusting a third party to hold a part, or in some cases, extreme cases, all of your Bitcoin to get some dirty fiat. Platform risks. So what if the Bitcoin lender that you lent out your Bitcoin gets hacked? You have no way of verifying their security measures and procedures, and even what they state. At the end of the day, you just take their word for it. Another aspect, if not hacks, insolvent lenders. What if they over leverage themselves and they go insolvent? You essentially, once again, lose all the Bitcoin that you gave to the third party. And the third one is lack of real deposit insurance. Most, if not all, of Bitcoin-backed loan institutions do not have any insurance on them. So in case one of these two aspects happen, hack or insolvency, once again, you lose all of your Bitcoin. On the aspect of getting a loan, if you really want to get a loan for something that is crucial to you, I would highly advise to go down the traditional route and go get a fiat loan from a traditional loan company or a bank. They will offer you a much lower interest rate. And this is a no-brainer compared to going with one of the Bitcoin-backed loaning companies that charges in excess of 10% interest on the loan that you take out. Alternatively, what I personally do, and I think is the right thing, is selling responsibly your Bitcoin to cover your needs. In my eyes, it's a much safer way to go about it. If you need some extra cash, instead of going out alone, sell some of your Bitcoin. If you are disciplined in DCAing over many years, there is absolutely no chance that you will be in a minus, because with a long time preference and long enough time frame, you will always be in the positive. Personally, I will never go for a Bitcoin loan, and hence why I'm doing this video and sharing this information with you. Another point I want to bring up is to remind everyone, Bitcoin is money. So use it as money. Adopt a low time preference. Don't rush to increase your Bitcoin stack with reckless decisions. If you're looking for financial freedom, I'd highly recommend you stay disciplined and DCA monthly or weekly, whatever your preference is, into Bitcoin and hold it in self-custody, which is of utmost importance. I personally use Bull Bitcoin and highly recommend them. It's a non-custodial Bitcoin exchange where all of my DCAs happen automatically and go straight into my cold storage. Try it out for yourself. And if you sign up with my personal link in the comments, you will take advantage of lower fees. I hope this video gave you some new perspectives about taking out a Bitcoin-backed loan and will make you question this decision before you make any serious moves. I encourage everyone that watched this video to share your own experiences taking out Bitcoin-backed loans. And of course, if you have questions, in the comment section down below. Remember, slow and steady wins the race. Stack sats, stay humble, stay safe, and until next time, peace.